Well, an area of significant interest that we're seeing at the moment, generating a large number of inquiries, is the tower market, the mobile tower market in particular, although also broadcasting. And that can really be divided between infrastructure sharing initiatives, so tower sharing between operators, which we're seeing more in Europe and Central Asia as well. And tower sharing companies, so independent companies that own and operate the towers. And that's obviously historically been in the USA predominantly, but now we're seeing a lot of this kind of activity in Africa and also increasingly in Asia. When considering infrastructure sharing initiative, it's predominantly a sort of cost-saving move, particularly in consideration of the densification of the network requirements that are being driven by the increasing usage of mobile data and the rollout of LTE and in some cases the requirement for additional sites to cater for that demand. So in those cases they're looking at not only rationalising costs of existing networks but also looking forward, thinking about how they can meet that coverage, that capacity requirement even without rolling out additional sites themselves, which is a significant cost saving. On the African TowerCo side, it's more about focusing on the core business, so delivering the mobile services rather than being an infrastructure company. It's also about funding the additional rollout. Now in Africa this isn't only about data networks in urban areas, it's also about expanding rural coverage, for example, because we've still got a lot of countries where coverage remains confined to the urban areas, and a lot of the country remains without mobile services at all, or perhaps just the mobile services of one individual operator. So there are several different models adopted by tower companies. Probably the most common, particularly at the outset, the launch of a tower company or the entrance into a new market, in order to get them established, is what we call a sale and leaseback agreement. In this case, the operator sells either all or part of its tower portfolio to the tower company, and then leases it back to the operator for a monthly rate. So it takes on both the ownership of the asset and the costs of running the site and supplying it with fuel and what have you, and then makes this back through the monthly payments from the operator. The real business model in this sense is actually not leasing it back to the anchor tenant, to the operator who you purchased it from, but rather what we call leasing up to subsequent operators. So there may be a second or a third operator who wishes to put sites on that tower. The second model that we see, which is often off the back of an initial sale and leaseback agreement, is what we call build to suit, and that's where there is demand for a new tower in an area either for coverage reasons or for capacity reasons, where not only does the operator in question not have a tower, but also there isn't an alternative from one of the other operators in the market. So in these instances, the tower company takes on board the costs of building this tower, and they usually, before building it, ensure that there is demand from more than one operator, and it is commissioned by the anchor in most cases. And then the final model that we look at, and there are variations upon a theme, but in broad sense, is where the ownership of the tower portfolio itself is not actually transferred to the TowerCo. The operator maintains the asset within their books. However, the operations are outsourced, and the TowerCo receives the right to lease that tower to other operators and thereby make money on this. So we as a company have the benefit of working on both sides of this market. When it comes to infrastructure sharing projects in Europe and Central Asia, we're really looking at working for one or other of the operators involved in the infrastructure sharing initiative, or for the combined infrastructure company that is created in order to manage this. When considering the tower companies in Africa, we often are looking at either equity or debt due diligence, either working for a funding party or for the towerco itself seeking funding. So that would be either a sell-side due diligence or a buy-side due diligence. In terms of the kind of projects undertaken, when considering a tower company due diligence, either sell-side or buy-side, or even just demand modelling for the towerco itself, the approach that we usually take is to consider demand on a geographic basis. So we build a bottom-up model considering different types of demand split between technology, and then we map this to the sites within the operator's tower, the towerco's tower portfolio, and considering the other sites within the country as potential competition and also as a reduction of demand from other operators. So we build these relatively complex bottom-up models, and then we use that to understand the evolution of demand going forward. It's not a precise science, but it certainly gives us good support in terms of how much demand and where that demand might be, and whether the towers owned by the tower portfolio are really in attractive locations. These tower portfolios do vary. Some of them have been very strategically located. In other cases, we have towers sitting within 5 metres of a competitor's site, in which case it's very difficult to lease it up unless there's a significant capacity requirement. So our bottom-up models are the starting point. We often then do a detailed business plan review, and the focus there, other than the demand itself for tenancies, is the pricing analysis, considering what the contracts say, and in particular considering the escalating factors, which are predominantly based around inflation. However, the subtlety is in which currency that inflation is based, considering the costs, which are predominantly fuel, labour locally, and from a capital perspective, obviously the parts and the generators. We then also do a detailed review of the costs. A large element of this is the fuel costs. You'll see I keep coming back around to energy, particularly in Africa, where grid power is either not connected to the sites or is only for a few hours a day. Then the fuel costs are very significant and a very volatile part of the overall tower business. And from our analysis, we then draw a conclusion on the reasonableness of the towerco's business plan, and we make adjustments that our clients then take into account when providing either equity or debt funding to the company in question.